Uneducated Economist here. So the title of this video, the crash for the U.S. economy has begun. Something of that nature is what I put up there for the title. And really this is coming from an article that I was reading, interviewing Robert Kiyosaki, or talking about Robert Kiyosaki, who has brought up this idea that the crashing economy has begun. And now I'm trying to conceptualize this idea that it has begun. Like, what has begun? Like, what is it that has different today than what was different yesterday or the day before or the day before that? Like, there's no difference in anything that the Federal Reserve is doing from last week to this week. There is going to be a moment here in the future in which that they adjust the roll-off of the balance sheet. But other than that, there is nothing different about monetary policy today, last week, or next week, right? But yet somehow things have changed and now the crashing economy has begun. See, this is the type of stuff that I read that I just shake my head at. Now, I'm not trying to deny that Robert Kiyosaki is accurate in his information and his calling out of the economy and the crashing of it and that it has begun. I'm not trying to deny any of that. What I'm trying to say, though, is that there's no difference in anything that has happened from last week to this week to next week, right, when it comes to monetary policy. But the idea has, the ideas have changed. And now the people do feel that there is a change that has happened, but there isn't. Right? And this is what really blows me away when I read a lot of these articles out there on what it is that people feel is coming from the Federal Reserve and what they think is going on within the economy itself. Now, when I read articles like this, it really, to me, is sensationalized. It's really just trying for clickbait. And I know it's going to work for this video as well, because clickbaity titles is what works. Right? It's not so much about the information that you put in it, because there's really nothing inside of that article that gives you any kind of real information about what's going on within the economy. It's just an opinion, right? And to believe that it has begun really doesn't have any kind of merit to it, because there's no difference between what happened last week, this week, and next week. Right? Now, the announcement of the Federal Reserve adjusting their balance sheet is kind of a big deal, but that doesn't happen until June, right? So even still, as of right now, there is no difference within the economy from last week to this week to next week. So to think that it has begun, I have to wonder, what is it that has begun? The perception of a failing economy? Is that what has begun? The idea of moving into cryptocurrencies or gold or anything like that to get away from an inflationary scenario doesn't work. Okay? I'm going to say that straight up. It doesn't work. I've tried. I tried it with silver. I tried with silver since the great financial crisis. Since 2008, I have been buying silver with the intent that I was going to protect myself from inflation. It never worked. So to think that it's going to work now is kind of delusional. Right? I mean, why would I believe that it happens now when it didn't happen for the previous 15 years? So I think about that when people are suggesting that you get into cryptocurrencies or gold to protect yourself from an inflationary scenario. I have to wonder what exactly it is that they are anticipating is going to happen. Because what I see happening, even with the announcement of the reduction of the rolling off of the balance sheet, the Federal Reserve is in quantitative tightening. That means the dollar is going to get stronger going into the future. That means your buying power is going to get better when it comes to the purchase of gold and silver and cryptocurrencies. See, I believe that there's buying opportunities coming into the future because we're going to be running into the liquidity crisis. And it's starting to present itself when you see things happening out there with the Treasury making announcements about buying back their own bonds. Right? We have to take this stuff into consideration. We also have to take into consideration that the Federal Reserve wanted a higher inflation expectation, because too low of an inflation expectation was interfering with their monetary policy. See, if we don't take this all into consideration when we think about the market crashing or the beginning of the market crash or any of that other stuff, then we're going to be very lost when it comes to what it is that the Federal Reserve is really intending on doing. So if you take on the consideration that the Federal Reserve has lost control and that they don't know what they're doing, if you believe that, then I would get 100% into gold and silver and cryptocurrencies. I would be out of the dollar. But if you have any kind of idea or understanding of what it is that the Federal Reserve was going for with their monetary policy, and that understanding that the inflation expectation was persistently too low rather than too high, and now with an inflation expectation that is persistently high, they have actually acquired their monetary policy back. Like, understanding it from this position is so much different from what anybody else is saying, especially when it comes to a market crash. Right? The Federal Reserve did not put us in a position that we are going to go into a market crash. We are going into a liquidity crisis. They are tightening up the currency. And in that sense, you want to be in dollars. And I know this is so like backwards thinking from what so many people have experienced over the last few years when we had an inflationary scenario that was so persistent, and people believe that we are going into a hyperinflation scenario. To think that the dollar is actually going to get stronger into the future is very difficult for a lot of people to understand or even to try and fathom. But to think that everything is going to go up in price forever, just look at lumber. Lumber right now is incredibly low. The May contract is going to close somewhere around 500 per thousand. That is the same price that lumber was selling for back in 2017. Years and years and years ago, before all the money printing took off. So if you can't explain why it is that lumber is back at its normal price and believe that the Federal Reserve is destroying the currency every single day with money printing, not realizing that they're actually going into quantitative tightening right now, then you're missing it. Yeah, I would believe that the market crash had begun too, if I didn't know any of that stuff. And it's kind of evident out there when you look at all the things that are happening, you can see it. But if you don't understand what it is that the Federal Reserve was going for originally, then you probably will miss it. Yeah. All right. 7 minutes into this, we got almost 400 people watching, right on. Okay, gold has industrial demand. It does. Cash is king. I totally agree. Simon, you baited me in with your title. Yes, gotcha. All right. Because, you know, I was just talking with it again with somebody earlier today about it. And I like almost feel like literally just sitting down and writing lists of clickbaiting titles, like fear-mongering, clickbaity titles. Just so I could, like, you know, just have the titles all ready to go. Like, I'll figure out what it is that I want to say, you know, in the video, but then pick out whatever clickbaity title I can find in order to get the algorithm and the, you know, the videos to be spread around or whatever it takes. I don't understand why that is, right? But it just is. So, sorry. Yeah, I don't know. Sorry, but I'm not that sorry. Moving on, let's talk about something. Brody, hey Simon and everyone, it's great to see you here, brother. All right, how many millionaires has Bitcoin made? Not a hedge. I don't know, a lot. Like, I was talking with somebody about Bitcoin earlier today, and they were like, man, I just don't understand it. It's, you know, going on, you know, just talking about how it's just going to go away or something of that nature. I don't know if that's exactly what they thought. But to me, like, when I think about Bitcoin right now, I think, man, it's not going away. Like, you know, people who said it's going to go to zero, it's going to fail, or it's not going to be used or whatever, that's not the case. Like, just look around. It's only getting bigger, right? The networking effect of it is growing. The idea of more supply coming into the market is gone, right? Bitcoin is going to be something that is going to be present into the future. How much it's going to be worth, or how much demand, or how much use, I don't know. But to think that it's going to go away or go into zero, or that it's worthless, yeah, I don't think that's going to work out too well. All right. No shame in a good title. Thanks, Dominic. All right, we know the truth behind the titles, so we're good. Yeah, I appreciate you guys. I mean, I really do, because I try to put good information. I try to put the stuff out there that's not I mean, I try not to be the doom and gloomer, but to be somebody who's just looking at this stuff objectively to try and understand what it is that we can do with the information to best position ourselves. That's it. That's what I'm up to, you know? But if I wanted to, I can make scary videos. I can make videos that would just talk about the New World Order coming down and completely messing up your entire life, and I would be good at it. Like, I could do that, you know? But that's not what I'm up to. Like, I want to do stuff that is actually beneficial and real. Like, you know, scaring the hell out of people to try and get clicks is not, it's not commendable, you know? All right. There is no New World Order. I disagree, crummy VCR. All right. Got any tips for focusing Uneducated Economist? Sometimes I find it difficult to sit and read some of these reports. I find it incredibly difficult to read some of those things. When I was growing up all through elementary school, I had reading disabilities, reading comprehension, learning disabilities, stuff like that. So reading for more than just a few minutes, my mind would just blast off into other things, and I would be thinking about whatever I wanted to while reading, even reading out loud stuff. I would not retain any of the information that I was reading, and it made it very difficult for me to try and, you know, just do anything through school. Like, I did not do well in school. High school was a nightmare for me trying to get through and graduate. Like, I essentially had to cheat to get the graduate, you know, to get my diploma. So it was very hard. Outside of constant practice, right? If you have like reading comprehension issues like I did, read for 10 minutes. That's it. Just read for 10 minutes, knowing that you're only going to read for 10 minutes. Think about what you read and then come back and do it again. When it came to speeches, like when I was reading a Federal Reserve speech, when I was first diving into these things, it would take me a week to get through a single speech. Now I can read a speech in a matter of, 10, 15 minutes, whatever it takes to get through it, and be able to retain the information and pinpoint out the stuff that I wanted, to really focus in on. I can do that fairly quickly now with these speeches, but there was a time when it would take me a week. Literally reading the thing over and over and over again, trying to figure out what it is that, they were trying to say. So it's work. It's just a lot of hard work. And you got to be committed to it, I guess. Inflation is good if you own assets, otherwise you're screwed. It's all going down, baby. Bitcoin is the most secure computer network and is decentralized. Yeah, I agree. Yeah. 10-year inverted yield curve has a delay of 500 days. We're a couple of months away from it. Does liquidity crisis occur quickly, or is it more subtle as credit card spending continues to grow and savings decrease? Well, I would imagine that you're probably going to start seeing liquidity crisis start popping up in particular areas as you find things become less liquid. Like, the idea that, back in the day, you remember not even just a few months ago when you could put a house out there in the market, it would sell instantaneously. Like, that houses were very liquid, right? Like, it was like, as soon as you put it on the market, somebody was there to buy it. As time went on and interest rates went up and the buyers became less capable, then the houses became less liquid, right? Well, that's the same for just about any asset out there, and especially when it comes to the bond market. Bond markets become an illiquid, meaning that there's not as many buyers out there, or it's difficult to sell, or you have to wait till somebody comes up with is willing to buy it at the price that you're hoping for without you lowering the price to get it sold. This is the liquidity issues. There's times in which that people aren't even thinking about it. Like, they're wondering how come it is that a house sits on the market for months. Like, they're like, wow, this is weird. Why? I mean, this is a bad market. Not realizing that there was a time that would be very normal. In fact, it was supposed to be that way. The houses would sit on the markets for months, even a year or more, right? As they had many offers and viewers and different things like that happening. It wasn't supposed to be an instantaneous sell. Like, you could put your house out there and it just sold immediately. That was not normal, right? So now when you're sitting in a situation when you have assets that are easily liquidable, right? You can just buy and sell them without any issues with it, and you don't take on the idea that there may come a moment where there's somebody that there won't be the availability to sell this item, right? This is what a lot of the banks like Silicon Valley Bank ran into. They had assets that weren't easily sold, and they had to start selling them for a discount. And this was a problem for them. This is the liquidity issues that are happening. When markets are all of a sudden less liquid, when people aren't able to just sell their items just instantaneously, this is the problem that a liquidity crisis is presenting, right, to people out there. But you don't know exactly where it's going to be, right? Is it going to land in the mortgage market? Is it going to land in the credit card? Is it going to land in housing? Where, I mean, nobody knows exactly where it's going to manifest itself first. I would assume that you're probably going to see a fairly decent ramping up of the failure of commercial real estate because it's already so prevalent within the economy right now. So when it comes to like liquidity of the commercial real estate market, there's no liquidity there, right? And this is the type of thing that we're going to find moving, into the future here. Wow, look at this. All right, we got Crab Gemini with the $20 super chat. Thank you so much. UE, you're crushing it. Keep up all the hard work. Well, thank you so much, man. I really appreciate the generous donation there to the channel, the $20, man. All right, Jonathan Ventura, $1.99. Thank you so much. Your thoughts on physical uranium in the UEC? As far as like physical anything, let me just talk about that here because that's something that I would probably have a better opinion on. Is that when it comes to a physical item like a precious metal, okay, in whether or not you're talking silver, gold, platinum, palladium, uranium, copper, nickel, lead, whatever it is, right? If you have a commodity or a particular metal of that nature that you're focusing in on, it doesn't really have to be metals, it could be anything, right? Again, think about the liquidity of it, right? Now, I have here in my pocket right now, I always carry these things. I got a couple of pieces of silver, okay? And I carry these things around with me just about every single day. And it's just pocket piece that I carry. Now, let's say I ran out of gas. And I just need I need $10 worth of gas, right? And now, granted, this thing is closer to 30, but if I wanted to, I could probably go down to just about any local bar and ask the patrons, hey man, I got this chunk of silver, and somebody's gonna recognize it for what it is and say, yeah man, I'll give you $10 for that. And boom, I got gas. Now, I could try to get $20 or even $30 for it. I could take it down to the pawn shop, maybe get a little bit more dollars down there, but the idea behind it is that I could take this piece of silver and get cash for it just about as quickly as you can imagine going to the bank to do it. Right? Now, I'm pretty sure I could do that. Like, it might take me a little bit of time to find somebody to give me some money, but the chances are is that they're going to give me some money for this chunk of silver. Now, if this was a gold coin and I needed $10, I would have a difficult time, right? Because now I would either have to break off a little tiny piece of it, and then, the rest of the coin may not be as considered as valuable. There's some issues that are going to go along with it if you're not selling the whole piece, right? So you could sell the whole gold coin off for, $2,300 or whatever it is, if you could find somebody to give it to you. Or you could just take a loss on a little chunk of silver, get your money, and be on your way, right? So again, we think about it. How liquidable is that uranium or that copper or that nickel or that lead when you go down to the bar to try and get $10 so you can get a little bit of gas into your tank? How easy would it be for me to sell this piece of silver as opposed to anything else out there? Like anything. I don't care what it is, right? This chunk of silver is probably the easiest thing that I could sell out of anything that you could possibly have, right? And so that's what I think about. Like, if, what's my opinion on taking physical possession of things? How easy is it for me to get rid of it? That's my question, right? And how useful is it going to be then in that sense? Wow, 656 people watching, right on. There's so many people up in here. Beer would be easier to sell. Yeah. Who the heck just said BTC is decentralized? All right. Buy a monkey wrench, not gold. It's heavy. That's how you know it's real easily. It's real easily. There you go. All-nighter. Thank you, Simon. Well, thank you, All-nighter, for being here, man. All right. Hey mods, want to handle these spammers? Yeah, they're on it. All right, UE, why doesn't price adjust to provide liquidity? The price does adjust. See, that's the problem, is that the price comes down. This is what, okay. So think about Silicon Valley Bank. They have assets and liabilities, right? The liabilities is all the money that's out there that everybody has, right? And now a lot of this liabilities are deposits that are sitting on the bank, right? So these deposits are owed to other people. When people come in and start taking those deposits away, all of a sudden now their liabilities or their liabilities outweigh their assets, right? So they need to start selling some assets in order to provide the money back to the depositors. However, the asset prices are falling because the yields are rising, right? So yields go up, prices go down, right? I just want to make sure I'm saying that right. So here you have a bank, right, who needs to find the liquidity to pay their depositors back, but the asset that they're selling is losing value. So every time they go to sell one of these assets, they're taking a loss, right? And this is a problem because eventually they're going to get to a point where they've sold off all their assets, but they still owe, right? That's the liquidity crisis. If those assets were selling quickly, easily, at the price that they wanted it for, then there's plenty of liquidity within the market. See, this is where like everybody knew. Like there was so many YouTubers out there who were calling it out, who knew way ahead of time that there was going to be bank failures. Very much like the Silicon Valley Bank, right? They knew it. They were calling it out. They had all kinds of like information talking about how there was going to be a banking crisis. They were very, very accurate. All of those guys. The one thing that they were missing when people asked me, do I feel comfortable keeping my money in the bank? What I said was, yes, I am, although I probably shouldn't be, right? Am I nervous? I should be, but I'm not, right? And the reason why is because I knew then that the Federal Reserve had backup policies, lifeboats, security measures, tools that nobody knew existed. And they didn't take those into consideration because the Federal Reserve didn't say anything about it. However, if you read through their documents, you can tell that they knew that there was going to be a banking crisis and that they would have alternative tools to deal with that situation. As soon as Silicon Valley Bank started to fail, bam, bank term funding program set up. Protected everybody's deposits, right? Just like I said it was going to happen. Now, I didn't know it was going to be that way. Like, I didn't want to say there's going to have a program called the Bank Term Funding Program that's going to backstop, the whole banking system or whatever. I didn't know it was going to be that. I just knew it was going to be something, all right? And that's what's scary about it is that literally putting your faith in the idea that they have a backup tool that nobody knows about is not exactly like a comfortable position to be in, all right? And that's why so many people, when they were putting out those videos, get your cash out of the bank now, it was accurate. It was an accurate thing to say and think about, right? And so I'm not trying to deny any of that stuff, but if you take on that consideration, but then don't take on the consideration that the Federal Reserve also knows, right? Like, think about it. If I can come out here and talk about stuff on my videos about like what it is that's going on within monetary policy and, the ideas that I have out here, and they're fairly accurate, then the Federal Reserve knows too, right? Like, right down to the supply chain breakdown and how the Fed said that they were hoping to get help from the supply side to ease inflationary pressures. They knew that wasn't going to work. And they knew it wasn't going to work because the day they said it, I was coming out on video saying that ain't going to work. And then here it is a year later or two or more, a year and a half later, right? And it's not working, right? They're like, man, the supply side didn't really come back in the way that we were hoping to bring the inflation down. Yeah, it's because the day they said it, it was an inaccurate statement. They knew then that they weren't going to get help from the supply side on a significant fashion to bring inflation down, and that inflation would end up rerunning persistently high, which is exactly in line with their monetary policy and what it is that they were looking for. This is what's like, this is what's really like kind of crazy when I go out there and I look out there at the mainstream media and I listen to a lot of people, is that nobody takes into consideration some of these monetary policies that I have tried to cover on my channel as much as I have, especially like the average inflation rate over time. That one is just like, it just blows me away how many people believe that the Fed is going for a 2% inflation target. It is so wrong. That is not their strategy, Gosh, look at all these comments with 738 people watching. My goodness, you guys love this title, don't you? All right, you'll see liquidity issues affect churches very quickly, probably right now even. Yeah, and I would imagine that anything that relies on donations or charity or the contributions of people, like, just literally like handing money over, that's going to become very difficult for a lot of these people. See, during the times when the money is flowing good and you're getting stimulus and everybody's just talking about how there's this money everywhere, then those type of organizations, the nonprofit, the ones who are working on charities and grants and whatever, they have access to a lot of funding, and it makes it fairly easy for them. But the moment that people start getting concerned, even if they have the money, they don't donate anymore. They're like, I think I might hold on to my money because I just don't know what the future is going to hold. And those particular organizations end up suffering pretty heavily because of that. Man, this is a good video today. So many people watching, 773. I'm loving it. All right, how much time do I have? All right, I got plenty of time here. U.S. government can't go bankrupt because we can print our own money. That's right. Bernstein, he was then asked by the interviewer, like you said, they print the dollars, so why does the government even borrow? Well, I think you have two different things going on there. The government doesn't print. The government has the access to a printing press. The Federal Reserve does that, right? Now, the Federal Reserve is a private banking organization, right? So when the Federal Reserve is printing up money, they're printing up a liability, right? That's their liability. Like, to us, we look at dollars as kind of like the asset because we get to use that to, pay taxes and pay debt, right? So to us, that looks like an asset to us. But to the Federal Reserve, it's a liability. So what is it that the Federal Reserve has on their balance sheet to offset their liability of dollars? They have the asset of the U.S. Treasuries, right? So now this system works out pretty well for the Federal Reserve and for the U.S. government, as the U.S. government is able to borrow as much money as they want, right, from the Federal Reserve, who then is taking on those assets, putting on their balance sheet and providing the liability of the U.S. dollar out there. Now, if you can imagine, if the Federal Reserve was holding on to gold and putting the dollar out there, then there would only be so many dollars out there because they would only be limited to how much gold they have on their balance sheet or have access to their, from their balance sheet. But if you have an unlimited ability to go into as deep a debt as you want, right, then you have unlimited ability to have, access to the asset and an unlimited ability to print the money, right? So this is really how it all goes down. Right? Now, it's not like something like the government can just go in there and just start printing up money. If they were to do that, they would not have, how would I put it? Regardless of what people think, the way that our monetary system is set up here in the United States, it actually brings a lot of confidence to the dollar. All right, that's why people end up using it. As much as they don't like it, as much as they want to, find something else, there is literally nothing else out there that provides the same thought of security and safety as the US dollar does, the US Treasury, right? Like, think about it from this sense. Are you going to go and put like Chinese bonds on your balance sheet as opposed to a US Treasury? Or how about like any nation? Just pick out anyone. I don't care. New Zealand. All right, you want to put New Zealand bonds on your balance sheet as opposed to a U.S. Treasury? I mean, how much do you want to trust New Zealand? That's where I'm kind of getting at, is that nobody else really does what the dollar can do. All right, 785 people. This is amazing, man. I wonder if we're going to get it up to 1,000. How much time? I got like 15 minutes left. That'd be cool to see 1,000 people watching at once. All right, can you explain liquidity issues when it comes to buying bonds for the average person? Sorry if it is a stupid question. No, it's not a stupid question. No, it's a very serious one. And now, when it comes to the liquidity within the bond market itself, it's probably not going to be noticed by an individual like us. Okay, the impact to us is going to be major because this is going to be where interest rates are established, right? Is generally inside of the bond market, and especially if you're following like the 10-year Treasury, wherever the 10-year Treasury goes, all interest rates go. So if you can imagine it like this, now why is this such an issue? If you are a bank and you had money to lend out. Now, anybody you are lending money to is going to have some sort of risk to it, right? There's a chance that they just won't pay you back the money. Now, if you take on risk, how is that risk established? Like, how do you know this is a risky person or not, or a risky corporation or something like that? Is that you have to look down to what is the least risky asset that's out there. The US Treasury, the 10-year, right? So the 10-year is by far like the most focused in on asset in the entire globe as far as establishing where the financial markets are going to go when it comes to interest rates and the establishment of those. That 10-year yield is very important. That's the interest rate that it pays. Now, for whatever reason, if there came a moment that a corporation, an insurance company, a bank wanted to sell their holding of a 10-year treasury, or any bond really, but let's assume this particular one, went to go sell that, and they could not find a buyer at the current price, and they needed that cash, right? That's a liquidity issue right now. Is that typically they could go to market, it would instantaneously sell. There is a pool of buyers and a pool of sellers that is so deep and so broad and so big that there is no questioning on whether or not that bond is going to have a selling point focused in on what it is right now. So basically you go to market and want to sell it for 20 bucks and there's a buyer for 20 bucks. You don't have to go like, oh, no $20 buyers. How about $19 buyers? Right? See, that's the liquidity issue, is that if you could go to the market and sell that bond instantaneously. Now, where is this going to be end up focusing in at is probably going to be on the big banks, like the primary dealers. The primary dealers are the guys, the big banks that go to auction. So when the Treasury goes to sell bonds, it's the big banks, the primary dealers, who buy those treasuries and then start distributing and selling them to the rest of the market out there, including the Federal Reserve. Like, the Federal Reserve can't go to the Treasury and buy it. They have to buy from the secondary market. So whatever the Federal Reserve is buying has already been purchased. Like, the Fed can't go to the Treasury that's monetizing the debt. So the big banks are the ones who end up selling to the Federal Reserve. Now, if those big banks all of a sudden want to go get cash and they sold some treasuries but can't find a buyer for them, that's a liquidity issue. And next thing you know, you're going to start finding where financial markets are going to start freezing up because of the access to dollars is starting to freeze up. Right? I don't know if I'm getting this all through, but this is how it goes down. 829 people watching. My goodness. All right, Michael John, thank you so much for the 20 bucks. Do you think you should starting scaring the shit out of people, since that's what's coming down the pipe? Sugarcoating them into hell isn't helping anyone, is it? No, it's absolutely not. But then again, living in fear doesn't help either, right? Don't live in fear. This is what happens when you live in fears, right? Is that everybody, I don't care who you are, where you live, what you do, how you were raised, whatever, you have energy within you and you feel the energy of other people. You know when you walk into a room, if the people in that room are happy or sad or whatever, right? You can feel that energy. And now here's the thing, when you have fear, when you are living in fear, what ends up happening is that the energy within you starts moving out to your extremities, right? It's in your hands, it's in your feet. This is where all your energy is now focused, because you're in a fight or flight mode, right? You're ready to either knock somebody out or you're ready to run away. But this is what fear does, is it puts your energy into those extremities where it then, can be useful to you as far as needing to immediately do something about the issue that you have at hand. Very big issue with that is that it also is a negative energy, which means that you're going to be repelling a lot of the positive things that are out there inside of the world. So now what you have to do is turn that around and focus that energy into the center. Because if you focus in on the center and bring it into more of an energy of love, then what you are going to find is that the positive energy is going to start bringing positive things from the world to you, right? And this is not meaning that you have to live in blissful ignorance or something like that nature. But what I am trying to say is that the information that you are receiving can be given any meaning you want. And now, if it's a meaning that this information is going to destroy my life, it's going to ruin me, it's going to make everything horrible, that's what it's going to do. That's exactly what it's going to do for you. Now, if you take this information and you go like, whoa, man, this is really heavy, this is hard, this is depressive, this is scary, this is some really intense stuff that I am now taking on as far as information. How do I take this information and then use it to my benefit? Right? Because it is heavy, it's scary, it's harsh, and it's beyond anything that I was hoping for, right? But that doesn't matter. How do you take this information and then take it from a fearful, scary thing into more of what is it that I need to do in order to make sure that I'm in the best position I can possibly be in? That's how you deal with this. Because if you live in fear, it's going to ruin your life. I assure you, right? It will create negative issues that come to you because of it. But thank you. I really appreciate the $20 too. And I really do. Thank you. Gold and silver have no real value, only the value you put on it. In the real economy, crash has more value: food, water, guns, ammo. I wouldn't give up any of those things in a crash. Well, Volkswagen van life, I mean, I agree somewhat to a certain level, but you have to also take into consideration that saying gold and silver have no value isn't exactly very accurate to say, because silver has been considered money for 5,000 years. So for 5,000 years, there's been some value given to silver the entire time, right? So to say that it has no value is not accurate. Having less value during a time of situations like you're saying, I can kind of agree with that. However, that's like the worst case scenario, and I don't believe the worst case scenario is taking place. I mean, if it was, then you would be right, but you got to also prepare for all opportunities, and not being the worst case scenario could be one of them. Remember to pop out of the chat and hit the like to feed the algorithm and spread the knowledge. Thank you so much there. What is it? Nightstone? G Nightstone? All right. Uneducated Economist. IT market is toast in 5 to 8 years. I'm thinking I'm going to go back into construction and learn welding. It's probably not a bad idea, bro. All right. Fear comes from the lack of faith in God. Yeah, I can agree very much with that. All right. Did I get... All right, Michael John. Wow, great answer. Thank you, Michael. I mean, but that's the way I feel. Like, I mean, you can find videos that I've done, 5 years ago about that. I had to overcome a lot of stuff, guys. I mean, when I was 40 years old, I had to look at myself and going, dude, you are not doing this right, man. The drinking, the screwing up, all the other stuff. Like, I mean, like a lot of times when I describe like a lot of my past, I feel like I'm describing like this loser or whatever. I did stuff. Like, I worked hard. I mean, I did things. I tried, to buy a house and stuff. I just wasn't focusing in properly on what it was that I was needing to do, And giving up drinking was the major part of that. Like, once I gave up drinking, it really started giving me the ability to start realizing what it was that I was doing incorrectly, right? And although it took a long time, after a while, after years, things start progressively getting better, And when you look back on that, it was just like, man, that's what was a lot of it, was the drinking. Like, getting off of work, cracking beers, and then not caring about what was happening, All right, moving on. Kiyosaki has no idea about anything. He's just regurgitates and clickbaits. I mean, I wouldn't say that he doesn't know anything about anything. I mean, he's pretty intelligent too, but he also understands like what it is that makes money, right? Just like the title of this video, I mean, anyone who is selling you a get-rich plan is making their money from you. Some people in the Bible had fear. Joshua. Yeah. I'm reconsidering my dream Euro vacation I had planned for September. Feels like something big is about to go down. All right. That was me and smoking weed. Yeah. Geometric. And that's what, like, that's one of the issues when it comes to carrying a higher vibration. Right? And this is, I know it's like kind of hippie sound and stuff, but really like that energy that you have within you, that positive, that negative, that higher, lower vibration, when it comes to like living life, having that good attitude, being present to the moment, this is the stuff that raises your vibration. And now what's funny about it is that if you're in a low vibration, depressive kind of place, smoking weed can actually raise your vibration up and make you feel better. Like, you know, if you had it on a scale of like 1 to 10, you know, you're feeling down at a 2 or 3, you smoke some weed, you get up to about a 5 or 6, you know, you're feeling pretty good while it lasts, right? Once it wears off, then it's back down to normal again. But during the time, you feel pretty good. However, on the flip side of that, when you start doing better in life and you're getting business rolling and you're getting better, like, you know, a network built and you're having better social, you know, encounters and stuff like that, your vibration is automatically elevated, right? So now you're up to like, you know, let's just say a 6 or an 8 or a 7, you know, on, you know, this higher vibration of it. And you smoke weed and it actually lowers your vibration back down to that 5. Right? So once you have gotten to a point where you're actually feeling better, you're positive, you have a higher vibration and stuff like that, smoking weed is your vibration, but it's actually working against you once you have raised your vibration and you're starting to feel better about things. All right, moving on. All right, another $2 from La Roca. Read Theory of Reflexivity? Reflexivity? By billionaire Soros. Alright. All your stuff to me, it's all going down. So all your stuff to me, it's all going down. I see. Okay, let's see here. I'm having to move to a lower cost of living area, and it's really hard to leave family and familiarity behind. But it required for me to get where I need to be. Yeah. You nailed it. Yeah, and that's kind of the case for a lot of people. Like even me being here in my area, like I grew up in this area. I love the county, the town that I'm in, but I feel like a little bit nervous for my kids to try and make it here because this is an expensive town. Like trying to go and get a job and get an apartment and do all the other things here is probably not going to work out too well, in the same sense that my wife and I were able to do that the day we graduated high school. Like we graduated high school and we went right to work. Like I had an apartment already. I was already renting an apartment my senior year in high school. My wife, whose mom moved away, like, I mean, my wife and her sister were living in an apartment while she was going to high school and going to work, right? And so when Sarah, like, when we graduated high school, she was already in the apartment. We graduated high school. The night I graduated, we moved in together, and we have been together and on our own ever since then. And it was really difficult at that time. Like, for 2 kids, graduated high school, regular jobs. I was working at the lumberyard. She's working at the pizza place, you know, and just trying to make rent and make ends meet and stuff like that was incredibly difficult then. I can't imagine what that would be like today. Right? I mean, it would be just almost impossible. All right, what time is it? All righty, guys. Man, I don't want to quit because we have 900 people watching right now. Holy moly, what an incredible live stream. I think there's only been one other time I've had as many people on. But I got to go back to work. So, unfortunately, I just can't hang out, even though these super chats keep rolling in. Joe, thank you very much for the $5. I have a $50 EE bond issued in 1986. What should I do with it? Well, I would imagine that thing is probably all mature by now, so it's not going to do anything other than be $50. So I would guess go cash it in and get another bond, or go buy a chunk of silver, or go buy Bitcoin, because it's not doing anything for you at this point, right? I mean, isn't that matured by now? So if that's the case, I would just cash it in or go get another bond or something. Oh, you guys just aren't stopping. All right, $20. Larry, thank you so much for the $20 super sticker. Thanks for being you, man. Well, thank you. I really appreciate that. You guys are so awesome here. But yeah, if I don't quit now, I'm going to end up being late getting back. Thanks, everyone, for your participation. Yeah, thank you, all-nighter, man. I appreciate you, buddy. All right, stay. Super chats are likely better than your work. Yeah, They might be, but I have responsibilities that I have to go and deal with. So thank you guys very much for being here today. This was a great live stream. Thank you very much for the support. Thank you all for the super chats and for hitting that like button. And yeah, we'll talk to you again real soon. Uneducated Economist, you let me know.